Good afternoon, this is Rich Nelson with Allendale. We're going to cover the wrap-up commodity comments. This is Friday, December 9th of 2011. Quite a big chunk of news here to kind of digest for the trade this morning. Obviously, we've got two big things, the USDA grain report, which Paul did mention this morning, as well as the EU summit type of news. And as far as the USDA report, there's no doubt about it. It was neutral to moderately bearish here for some of these contracts. As far as corn, USDA did not really touch the old crop U.S. picture very much, but they did add, of course, production here for this for the world side here, namely from a large increase of over 8 million tons to China. So certainly that was a little bearish on corn. As far as soybeans, we did see a larger than expected drop in both crush as well as exports, and therefore ending stocks rose a little larger than the average trade guess for soybeans on the U.S. side as well. So it was moderately bearish here for soybeans. For the wheat, of course, the 50 million bushel decline posted for exports this morning was a little more than most people were expecting. So that was a little bearish on the U.S. side. In addition, we did see a little larger increase to world production numbers than expected. So we got hit on both the U.S. and world picture here. But overall, it's interesting to see that we have this USDA report this morning, which was neutral to bearish. We got this kind of mixed news regarding the EU summit. On the bullish end, you know what? There was an agreement signed. So we've got 26 of 27 countries have agreed to tie their finances to the EU treaty. That's great for the big long-term picture. And some suggest it's basically going to say that we will not have another debt situation show its ugly head in 5 years or 10 years or whatever it is for this EU situation. But bears can counter and they can say, you know what, it's great to see this EU summit, but show me the money for the next 3 months. Show me how anything has changed regarding Italy being able to pay its bills, Spain being able to pay its bills, and those issues. So bears can point out, you know, this was great for a long-term type of story, but for the short term, really nothing has changed here. So we do have some kind of better feelings about this EU summit and EU situation, but obviously we cannot say it's completely fixed here yet. So with that in mind, we would call today's overall jumble of news kind of mixed, obviously slightly bearish, but it's nothing new that we haven't known for some time here in the big picture. On top of that, also got to point out, you know what, part of the reason why we did drop for corn prices in recent weeks was those perceptions of bad export sales. And what yesterday's report said for the weekly export sales number, that actually showed that, you know, we're back to normal. We're back to where we should be for the latest numbers. So you can't argue that maybe we've taken off some of the bearish reason for us having low corn prices. Maybe that has been taken off the table as of yesterday. In addition, we still have some suggesting that this South American weather situation may be slightly drier over the next few weeks. We don't have anybody that we see, at least as far as meteorologists, that are saying it's a major panic situation. But you can make some arguments that it might be a little hard for this bean market to drop below $11 while we still have these, you know, kind of questionable concerns about South America in front of us here. So overall, corn down 7, beans hit new lows for their downtrend, down 26, and these are last trades, not settlements. And wheat did a great job coming back from new lows for the downtrend. I have a last trade down 1 3/4 for the Chicago wheat contract. Over on livestock, this is actually almost, if not actually, a bigger day for news on livestock than grains. Certainly, as far as the cattle go, this morning's news and as far as the cash beef and cash cattle, quite some big moves going on this week. Now let's give you a little preview and kind of lead you into what happened here today by talking about this wholesale beef market. Last week, choice beef lost $5, select beef lost $4. This week, including that massive, large decline yesterday for choice, wholesale beef down $6 this week for choice and down $3 for select. So this beef market is telling us very clearly we have some problems with demand. And that is still an issue for us right now. And of course, our main guess right now with this demand problem is probably on the export side. They've been phenomenal in recent months. Maybe just some slight weakening here in the last few weeks. So as far as this goes, we did see cash cattle trade a large $4 lower than last week at 120. This helped push futures on the February contract down low enough to retest their February 23rd lows. So for cattle, we do have reason why we have prices going down. We do have reason to suggest that it probably will continue to fall for the next week to 2 weeks left on the cattle end, at least here. So keep in mind, futures were right in pricing in lower cash cattle, and it looks like we should expect this trade for the very short term. Our 2012 long-term picture has not changed one single bit by any news here today. As far as hogs, up 57 cents for this December contract. You may notice on your quotes that December was the only contract which posted a gain here today. All others were down. And one big reason for us right now, in our opinion, is the perception that the next 6 months for hogs will show a change in production ideas, will show expansion possibly starting. Obviously, it's going to be not anywhere near enough to stop our meat deficit discussion for 2012, meaning lower chicken, lower beef, slightly higher pork. But this is something we will point out. Producers do want to expand after 2 solid years of profits. And if we drop this corn price like we did here today, another 10 cents, that just simply gives these hog producers more incentive to maybe accelerate those expansion plans. So that may explain kind of why we have seen some pretty good declines in deferred hog contracts here in the last few days. Biggest news here for us right now, obviously, is this annual conference we do January 20th and 21st. This is going to be a big deal for us, obviously, and a big deal for producers to set up their marketing plans for 2012. So quite a lot of information plugged in there. Just a taste of what you're going to see at this conference will be shown on our research product today. We're going to be discussing how the situation looks for the world situation right now. How tight are world grain supplies of both corn, soybeans, and even wheat here as well here too. So we're going to see a taste of that on the research product tonight. If you're not subscribing, get a hold of Allendale. Get a hold of our website. That's Allendale, which is 1-800-262-7538, or that website, which is allendale-inc.com. Certainly get a hold of the research product, get a taste of what we do here at Allendale, and certainly you'll see the big kahuna, what we really do as far as our research products and research focus will be shown at that annual conference. So that's going on here in January, and certainly, as I mentioned yesterday, get that date locked in on your calendar right now. Get your travel plans all locked up as well. So hopefully it won't be any last-minute try and moves to try and get yourself to this conference. If you have any questions at all about markets, marketing, what to do with old crop grain, what to do with 2012 grain, feel free to give us a call here at Allendale. We have a fantastic group of brokers, 1-800-2, and then spell out market, M-A-R-K-E-T. This is Rich Nelson with Allendale. Have a good trading day and a good trading week.